Hey, it's Pete. If you're day trading stocks and you're finding it to be a little bit more challenging than you expected, today, right here in this video, I'm going to give you from A to Z everything that I've done over the last 25 years and the same strategy that I used when I owned my trading firm in New York City. Now, I want to be clear. I'm going to give you all of the steps. Give yourself a little bit of a chance to digest this, maybe watch the video once or twice. Excuse me, take some notes. And then if you have any follow-up questions, you can always leave them in the comments below the video. I remember when I started trading back in 2000, actually April 17th of 2000. I thought it was a little bit easier than it actually was when I first started trading. It looked so easy in the news. And even now on YouTube, day trading stocks probably looks like it's easy because everybody's got this super secret technique that they want to teach you. What I'm going to show you today is the entire process. And hopefully by the time you're done with this video, again, watch it more than once if you need to, you're going to realize that it's a bunch of decisions that work together. And the better you learn to make those decisions as a part of one big unit, the easier it's going to be to find better trades. And then you'll be around long enough to understand that day trading stocks can be a very nice way to make a living if you put in your time and if you put in your time to actually pay attention to your results and improve. I remember when I first started day trading, one of the biggest things, maybe after about a year or so, when I realized how hard it was, I said, just give me a system. If you just give me a system, I can follow it. And I promise I will. And that's what we're going to do today. I'm going to give back to you what I never ended up getting some 20 some odd years ago. So we're going to walk you. I'm going to give you a quick overview of everything we're going to touch on today. I got like a couple of slides where I just want to make sure that there's stuff on the screen. But by the time you're done with this video, you're going to actually have a really good sense of what a professional day trader does. From start to finish, finding stocks, choosing stocks, which stocks to trade, how to set up your platform, all those kinds of things. And I'd love to see you maybe even come and trade with my community. That's completely up to you. But I'll give you a quick walkthrough. We're going to talk about the market itself and how to set up the stocks and the market. We're going to get a little bit into screening for stocks, specifically day trading stocks. We're going to touch very briefly on actually building out a trading plan. And I know you like everybody else. I know about a trading plan. Trust me, you need to take some time to put one together because you're basically pre-building out the reasons you're going to risk money. The more time you put into planning how you plan to risk money, the easier it's going to be than when you're actually placing a trade and allocating money. All right, promise you, I promise you on that. Right. The next thing we're going to talk about, we're going to get into. I'll give you a little bit of future pacing here. We're also going to show you the exact screen setup that I have when I'm actually day trading myself. I'll show you everything that's on the screen, including what's in these watch lists here on the side. And then we're also going to break down this other screen, which is how we're going to call playing chess versus playing checkers, and breaking down some of what we call the market internals and some sector rotation stuff. So there's a bunch of things we're going to cover here today. But the first thing I want to talk about, which I think is very, very important, and I just want to be very brutally honest about this because you're on YouTube, you're watching this right now. I'm hopefully helping you out and whatnot. Day trading is hard. It is extremely hard because there's a lot of decisions in a very short period of time. And not only do you have to be confident in the decisions you're making, but you need to process that information relatively quickly. Again, depending on what time frame you're looking at. I never go below a 5-minute chart, just to give everybody an idea. I also don't read level 2. Over the years, I've just developed a strategy that I'm going to walk you through today for specifically day trading stocks. You could probably implement it with futures and whatnot too, but specifically day trading stocks. That it's very formulaic, and that's really where the repeatability comes from. I want to be clear about this. The consistency that you are searching for as a day trader is found in the consistency with which you follow your plan. But that's assuming in the first place you actually have a plan. I'm going to walk you through all the steps, and then you could kind of make all of this your own. And then hopefully you'll get to the point where you're like, oh, this is easier than I thought. It's still challenging. I want to be clear. Day trading is hard. Let me pull this up on the screen so it's right in the middle. Day trading is hard because it requires you to have rules and follow those rules. And not only that, sometimes there are different market conditions, and we're going to talk about that in just a second. I'll give you an example. If we could take a look at, let's say, the market over the last, let's say several months, right? You can actually see here what the SPY has done since Liberation Day, bottomed out. The stock market's just pretty much on a tear. But then we had last week. If you take that, right now, this is Monday, prices are unfolding, right? But you can see last week, the last 5 days of trading, the stock market, and specifically the S&P 500, the SPY ETF, closed red 5 days in a row last week. So you actually had kind of like this challenge as a day trader where part of your filtering system to determine which stocks you want to trade need to, generally speaking, either have what we call order flow, a bigger picture edge, a reason you want to be buying or short selling that stock. And then you lean heavy into that, basically looking for intraday timeframes to be in sync with that bigger picture dominant order flow. I'll show you exactly what I mean by that because I want to make sure that you get the maximum value out of this. So what we're talking about here is when we're looking at this, if we come into the day looking for ideas and saying this stock is a raging bull market right now in this particular idea, then what we're looking to do is we're looking to find intraday opportunities that are in sync with that bigger dominant order flow. Now, I just want to come on the screen really quick, and I'll explain what's on that screen in just a second. I just want to be clear about this. There's 100,000 different ways to day trade. The way that I do it, again, as I get a little bit older, a little wiser, and all those kinds of things, I like for things to be formulaic. I like them to be systematic. I want to take the discretionary part out of it, all the emotional type decisions, the spur of the moment decisions. I want to say, I know exactly why I'm doing this, and it's either there or it's not there. So the first thing I want to point out here on this screen is if we could come into the day saying that a stock is bullish, for example, in that big dominant time frame, which in my case is the daily chart, and there's different indicators you can use. I keep it simple with just moving averages. Then intraday, I want to know, is the intraday price action, is the intraday tape, is the intraday order flow the same direction as that bigger picture? And the reason I'm pointing this out, right? I want to be super clear about this. I want to be really transparent and whatnot. The reason I called that out and said that the last 5 days in the market last week were red is because last week was a really tough week to day trade profitably. Actually, I think I broke even last week. I definitely didn't make that much money if I did, because the big picture has been bullish, but most of last week, intraday, did not match that bigger picture bias. So you had to be a little bit more of a sniper. You had to be a little bit quicker on your expectations for follow through. And there were a lot of ideas that met the criteria, but did not get the same follow through. We kind of talked about this on one of our recent coaching sessions in the community, where we basically said that there's 3 stages of expectations for trade ideas. Number 1, you put a trade on, flies in your favor, everything's golden, right? Continue, add share size, build into that position, right? The number 2 one is where you put a trade on, it quickly moves in your favor, and then maybe kind of drifts a little bit, but doesn't give you quite that quick profitable momentum that you got, right? Fast momentum, slow down, a little bit different vibe, right? Here's the thing, though. You got to pay attention to that. You got to pay attention to the results you're getting and saying, what does that mean for the amount of risk I should be taking right now if I'm not getting the same follow through? So when you look at this chart right now, you can clearly see last week, all red, today green, a little bit more aggressive. And I'm going to show you how to filter that out for your day trading stocks in just a second. And then the third one is when you put on a good trade, moves in your favor and immediately reverses, and now it's kind of stuck between your entry and your stop loss. And that happened to me a lot last week, where I had good entries, good ideas, but the market conditions changed. So what did I do? I lowered my expectation for follow through. The big picture of the market was not on our side. Intraday price action, while maybe it was strong for a moment, the bigger picture now rolled over and kind of made things tougher. So I want to be clear with you and honest with you up front. Sometimes there's market conditions that just aren't fantastic. And we have to be really conscious of when that's happening and increase or decrease our position size in line with what's available in the market right now. And we're going to talk about in a second what that means to be available and what kinds of ideas we could be looking at as day traders. By the way, if you're finding some value out of everything that we're talking about right now and you'd like to come and join the community, this is not advertised anywhere. I just want to be clear about that. Hold your phone up here and use the QR code. And if you want to come and join the community for a year, you can get an $817 discount just because you're watching this video. It's kind of like me paying you back for watching this video. So hold your phone up and grab that QR code. We don't advertise that anywhere. It's just kind of like me thanking you for watching this video and coming in. So anyway, last week, I want to show you now how last week played into scenario building. And I want to kind of like go forward a little bit and tell you the big picture versus the intraday picture, right? So I want to give you a visual of exactly what that looks like on my charts. So if you can actually see over here, I have a big list of stocks that I would normally call my daily active watch list. And I tend to trade market leading stocks. I want to be clear about that. I don't trade low float stocks. I trade classic. I trade basically where I am looking for market leaders, sector leader, industry group leaders. For example, right now, obviously the big dog right now is AMD and NVIDIA. And AMD actually at this particular moment happens to be reporting tomorrow. But I want to point out here in this top right-hand corner where I'm basically talking about intraday order flow and whether or not it's in sync with the big picture. So this list right here, you can see it's all of the stocks that are in my active daily watch list, and very tech heavy with the way the market's trading right now. But I want to show you this list, which has everything in it, compared to this list, which is filtered for where the intraday order flow needs to be in sync with the bigger picture. And you can see that list just went from 17 down to 2. So what that basically means is when your software is set up properly, your software is telling you which stocks are in play right now at this moment, where the big picture is in sync with the intraday picture. Or maybe the other way around is actually better, because you want the big picture first and then the intraday picture to be in sync with that. So when I say day trading can be a little bit less stressful, a lot more formulaic, it really comes down to knowing what you're looking for. And there's a quote that I learned way back in the day when I first started trading, which is, if it's hard to find, it's not there. And I think a lot of people probably trade too much off of the, like, what's in front of me right now. And they're not really clear on, I'll just use a friend of mine, Mike Bellafiore. I'm sure you've heard of him. Great guys over at SMB Trading. You know, he's got the playbook, right? The playbook is basically like, here's exactly what I'm looking for. And if you are not clear on what you're looking for, then everything is going to look good, which by its very definition means you don't have an edge. So I want to be clear about what my edge is. Okay. I keep it super simple, super repeatable. We have members coming into the community who never traded before, who know exactly what they're doing right now, and they're having a lot of consistency, which again, that's what we want: control and consistency, right? Out of our day trading, that's exactly what we want. We don't want the stress. We want it to be, I know what I'm looking for. I know what I'm doing. And then we're going to get into right now what that means to actually implement it, right? So I want you to write that down. It's very, very important. Order flow on the higher time frames, and then the intraday price action, best case scenario. I just want to say, is that matching the big picture? If so, I'm going to hop on board and look for a ride. That's it. It can be that formulaic. So again, I'm just going to show you this right now. I want to show you the difference between the two lists. This part of my watch list is set up to tell me, is right now, this current hour, to be even more specific, in sync with what I have on the big picture daily time frame. And now if we go to the bottom of the list here, you can see it's actually stocks are popping in and popping out because they're matching or not matching, right? So here's the current hour. Here's the current week. And over here, when I say week, this is actually the last couple of weeks on the daily chart of this particular stock. And then the right-hand corner, we have the bottom right-hand corner, we actually have the weekly chart. So we have weekly chart, daily chart, hourly chart, 5-minute chart. And then we also have VWAP on that chart. If you don't know what VWAP is, it's volume weighted average price. Tells you where the dominant money traded at the average price throughout the day. One of the most valuable things you can use as a day trader. Okay. So before we move forward, I just want to do a little bit of PowerPointing. You can see there's not that many there. There's maybe 9, but I want these to be in the screen so that you can actually have a little bit of context and understand where we're going with all of this, right? So day trading is hard. Let's just all admit that. Let's be real about the scenario, and we can move on from there. And I want to be clear about this. Everything we're talking about here right now is what I do in my community, and it's right in front of you. I'm not hiding anything, right? But let's be clear. This is all informational purposes for education. It's up to you to make those final decisions. Again, I would love to help you make those decisions on a daily basis. And if you want to come into the community, hold your mouse up there, hold your phone up there and get that QR code, and you can make that big savings. Again, I want to pay you back for watching the video because I really appreciate that, right? So let's get into the slides, and then we'll get a little bit more into the screen, all right? So rule number 1 is obviously you need to develop an edge, and I just basically walked you through what my edge is. Higher time frame dominates. I'm looking for bullish stacked order flow. I'm looking for a little bit of what we would call sector rotation, being in sync with those big pictures on the stock and making sure the market and the market internals are in sync, right? I'm going to walk you through how to do all this in just a second. Now, what exactly is an edge? You probably heard the word edge 1,000 times, and it really comes down to it's a reason why you expect something to happen more often than not. So again, let's live in the real world. Losing trades happen. There's no way around it, right? So here's what I want to get across to you, and I just can't express this strongly enough. Developing an edge is the reason why you put on a trade, and you call it an edge, you call it probabilities, whatever you're comfortable calling it. Let's just really break that down so we can kind of help you get into the right mindset, what it means to be actively day trading stocks and how you can interact with the market in a way that's not so emotional with every single thing that happens. And it really comes down to this. The definition of edge means probability, right? Probability means most of the time we expect it to happen. And it also means sometimes it doesn't. It's that part that everybody forgets. And it's crazy that they only think that it happens all the time. You do not need it to happen all the time. It'd be nice if it happens more often than not. When we buy a stock, we place a day trade. The bottom line is we're putting that trade on. We're choosing to accept risk because we believe our edge is in front of us. I'll use a little bit more of my language in my community, which is basically we also believe that we found the optimal entry to buy that stock, the moment of greatest reward potential. And we also have a system in place for managing that profit, kicking in the profitability boosters, and obviously using a profit maximizer to make more on our wins. And I'm going to talk about that in just a second. So let's be super clear about this. Know what that definition of edge means. Most of the time, yes, sometimes no, and be prepared for both of those scenarios. Now, how do you be prepared for both of those scenarios? Well, number one, if we understand that even a part of the strongest edge ever has losses, well, we have to be okay with that. We have to be okay with the fact that any significant real business is going to have expenses. A trading loss is a part of that. When you accept the fact that even the best edges are going to sometimes not follow through, you just accept it and you move on to the next trade. You get your capital back. Now, I know that sounds ridiculously easy, right? Because we're not in a trade together right now. But I have to tell you, when you internalize that and it really becomes a core part of who you are as a trader, it becomes easier to take a loss because you're like, okay, that one didn't follow through. I got feedback. Kick it out, get the buying power back, and I'm going to look for another trade that matches the edge. Now, here's the big thing. A lot of people say that your edge is an opportunity to make money. And that's kind of where we get blinded. We get blinded by saying, I'm putting this trade on because it's an opportunity to make money. And you go into the trade saying, I'm expecting to make money. I think I'm going to make money, and I'm probably going to make money. And all that makes sense, right? But that's not how we think. We think I'm putting the trade on, therefore I am going to make money. And that's where we kind of get locked into this thought process, and we don't allow for anything else to happen. And if and when the trade moves against us, without the right framework for saying it's nothing more than my opportunity to apply an edge, which is different from an opportunity to make money. The second one, opportunity to apply an edge, apply my edge, means that now I'm open to any possibility. And if it happens to be one of those trades that don't work out, I just kick it out and I go to the next one. And I really hope you learn that from me because it's really, really important. All right. Okay. Next, number 3. A trading loss is a business. I guess it's kind of like 2A. So this is really something that I'm very well known for right now. And I want you to write this down. If you have a hard time taking losses right now, especially when you're day trading stocks, it's critically important that you understand if you are going to run a significant, serious business, you're going to have expenses. And part of those expenses are trading losses. You're buying stocks, that's your inventory. And our job is to turn that inventory into profits. Sometimes that inventory doesn't turn into profits, and we have to be okay with marking it down and kicking it out. If you adopt what I'm talking about right here in this slide as a day trader, any trader really, but as day trading stocks, a trading loss is a business expense. You see the trade go down, it takes you out, you just get out of it like that. You will save yourself so much anguish, so much stress, so much revenge trading. You get rid of all that stuff, and you will just be formulaic. Again, I want to keep coming back to that. Formulaic, predictable, consistent. That's where the repeatability comes in to day trading. Again, I want to say it clearly, it's hard work. I just told you how I traded last week. But when you minimize the downside by being disciplined on when it doesn't work, and now getting into, we're going to say about what happens when it does work. All right. Okay. So next, rule number 3, be a trader. This is a very important thing, and it can't be overstated in my opinion. Chart reading is not trading. Nobody in the world opened up a trading account to say, I want to be the best chart reader on the planet. I want to know every candlestick. I want to know stochastics, MACD. I want to know the formulas behind all those things. Instead of using simple moving averages, I'm going to use exponential moving averages, regression moving averages. I'm going to know them all. Nobody opened a trading account to say that. You opened a trading account because you want to make money, which means that your primary goal should understand chart reading, technical analysis, whichever language you're comfortable with, and then level up to what we do, which is order flow, which is putting those pieces together. And I kind of showed you that on the screen already. Longer term order flow, dominant bias, shorter term order flow, looking for a trade, hop on board in that direction. And then we had the bigger picture of the market and the market internal. So we're kind of putting those pieces together. Now, you might be thinking, those charts, all that stuff was complicated. It takes you 15 minutes, a half an hour to set them up. It could take you a lifetime to learn how to use them, but obviously when you're around mentors and community who are using it, it becomes easier to implement. And I want to say one thing, like, I think one of the things that makes our community very, very different is that we only look at one strategy. The entire community is basically like, the Borg in Star Trek, where all these eyes, all these minds are all looking at the same thing. And then the community itself becomes a place for ideas just dedicated to that one strategy. So if somebody calls something out, everybody understands what they're talking about. So the community really becomes a nice place where there's ample ideas, regardless of your experience level. Okay. So I want to repeat this. All right. Chart reading is not trading. Ask yourself which of those skills you are spending the most time on. And I'm willing to bet that you're spending a lot of time on becoming indicator king. You don't want to do that. You want to learn how to become a better trader. All right. Rule number 4 for day trading: trade management on profitable trades is what separates consistent winning day traders from frustrated and broke day traders. Can't stress this enough. When you build out systems for managing winning trades and have discipline for adding to shares, what to do on pullbacks, how to trade around a core position, how to trade and not put limits on what a stock can do, which we're going to talk about in a second, you need to have the same discipline and flawless execution on your winners that you eventually learn to have on your losers, and then carry that over to the profitable side and say, no, nothing changed. Again, if we pull up that stuff of the market, we can say, nope, nothing's changed. The market's still strong. The 3 major indices are still strong. The advanced decline line is still strong. The VIX is going down, and the ticket reading is all positive. And take a look on over at most sectors and say most sectors are green at that moment as well. Now we have a reason to hang on to that thing because we put in reason 1, reason 2, reason 3. Now, let me ask you a question. How long did it take to analyze that? 4 seconds? We're not studying is that the top? Is that not the top? Is that a wick? Is everything going up right now or not? And how many different places can I see that? Yes, great. I'm going to hold longer, maybe add to it. If that's a big mixed bag and it doesn't all look the same, what am I going to do? I'm going to lower my initial position size, maybe add to the position a little less aggressively, and maybe I'll book my profits with a more tightly wound profit maximizer as opposed to giving it more room for the bigger trades. I'm going to give you something to think about here because this is important. I love to use analogies and metaphors and whatnot. You got on the road, you're driving 75, everything's great, right? Good. 10 minutes later, it's raining. And then 5 minutes later, there's traffic because of the rain and 2 cars in front and put brakes on. That's what it means to be a trader. You're paying attention to new information. For some reason, so many day traders like, no, I decided what I was going to do before I put the trade on and I'm sticking to it. But what if the conditions change? What if the conditions now are better than they were in the first 2 hours a day? Let's say 1:30 rolls around and everything that you were looking for at 9:30 in the morning is now there at 2:30 in the afternoon or 1:30 in the afternoon. Day traders will set up, belly up to the bar, and trade differently because you have your software set up to see what's going on in that moment. And again, I'll just give you a quick rundown on what's here. We have the S&P, the SPY in the top left-hand corner, and these are all hourly charts. The diamonds, the Dow Jones ETF, the QQQ, all 3 of those charts have VWAP, which I explained to you before, volume-weighted average price, advanced decline line, the VIX, and the tick. And then we have the same thing on the charts here for the major sectors. So we're building ideas, building arguments, all of these pieces that just took us like 5 seconds to look at. How many of those pieces are in the argument? If more of those pieces are in the argument, that should definitively change our expectation for position size and follow through. So when I say position size, I basically mean, how do I want to start this trade based on how all those pieces look? And again, we just looked at it like that, right? Day trading is hard. Give yourself a chance to learn it, but Once you have the software set up, it's really then just a question of glance over, glance over, glance over. And then what do I do now based on the decision I'm about to make? And then ultimately it comes all the way back to the other screen, which is what we're looking to do with the trade itself. How do we determine? And you can see so far this hour, no other stocks meet the criteria. And by the way, I want to walk you through that for 1 second. Look at the amount of stocks that are in this active watch list and look at how many of them meet the criteria right now. 2. 2 out of 17 meet the criteria because we show you how to set the charts up properly. And the watch list, you only want to be paying attention to the stocks that meet the criteria right now in this moment. Long-term dominant order flow is that big list, but right now there's only 2 that meet the criteria. So we filtered all those stocks down to the only ones we should be paying attention to right now in this moment. Then we kind of break it down a little bit more. What about the sectors? Like all those kinds of things. How many stocks with Walmart are also going up? So for example, you could take a look at some other stocks in the same industry group and look at that. Walmart actually just fell out of the list as of this moment. So that means that it's not meeting that same criteria on the higher time frame. So do you see how when you have the software set up, you're really basically just kind of sitting out. Well, first of all, software set up in the way that you define your edge. You're basically just kind of sitting back and saying, okay, software, show me the stocks that meet the edge right now. Then I will determine how much I want to get involved if I have an optimal entry. That's where repeatable comes from. You basically have those short sentences that basically help you build the argument, which we're going to get into right now. So let's get back. I want to make sure you have these slides because they're an important part of what we do. So again, planning your winners with the same discipline that you plan on your losers, which includes adding, when to add, how to add, like I just talked about before, and what situation needs to be included there. Now, number 4 is in addition to what we just talked about. This is technically 4A. Never limit your gains. One of the biggest mistakes I see people do, and I put initial profit targets on my trades, especially my swing trades, but that's because I want to know, is my initial risk justified for the likely reward on this trade? But I don't get out at that level. If I do reach that level, I've already planned in how I plan on adding shares and when. But if it hits that level, then I shift from initial profit target to profit maximizer. Now that my risk is 3 to 1, basically, or whatever it happens to be on that individual idea based on what's going on in the market. But I want to be clear about this. Don't limit your gains. Let the market tell you when it's done going up or going down if you happen to be a short seller. Okay, it's a really big part of trading. All right, that's rule number 4A. Number 5, play smarter. Learn to build arguments for great ideas and stop trading the candlestick. Now, what I mean by that is we can go back into what we're looking at over here. Far too many people that are frustrated, broke, not making money, spend all their time over here on the entry setup. And they don't take into consideration whether or not there is bullish stacked order flow in the stock itself. They don't ask enough questions about whether or not the stock is in the context of bigger picture dominant order flow. Instead, they're just stuck looking at what's that 5-minute candle mean and that kind of stuff. That's the very last part. Let's not forget this. The entry setup only matters in the context of your dominant edge being present at that moment. So many people mess this up. Like, what is the name of that candle? What's the name of that candle? And all those kinds of things. They only matter if in front of that candle is a dominant bias that you're looking to hitch a ride in front of. So when we talk about setting up the software, that's what matters. My screen's over here. That's why I'm pointing over here. So please write that down. It's very, very important. And you can actually see right now, none of the stocks in the list. Oh, Caterpillar just popped back in there, green. And again, you can see it's above some of the key moving averages. Okay. So very important. By the way, does this make things a little bit easier for at least open the possibility that day trading when structured becomes easier? That's really the big thing I want to get across to you. Okay. All right. So next and last with the PowerPoints, reframing ourselves from the fear of losing unrealized gains at the expense of a bigger gain. Now, what does that mean? All right. So let's break this down while the market's unfolding around us. Raise your hand if you've had a profitable trade. You're excited about the trade. And then all of a sudden it slows down a little bit and starts pulling back. And you're like, oh my gosh, I don't want to give back this $1,000. But you look at all the other stuff that we just showed you on the screen and you're like, well, everything still looks amazing. Maybe the stock's just pausing, but then you got like you got an angel on each of your shoulders. And you're like, this guy's telling you to take the profits because they're afraid it's going to go away. And then this person's telling you, well, beginning of the trade said, if all these things line up, let's go get it. Let's make some money. The problem is this fear captures our attention far too much, and we need to reframe it every single time we're in a trade and say, why would I put limits on what I can do? If everything that I'm looking at, and again, I'm just going to go over this one more time with you. If I'm looking at the dominant timeframes are still valid and the longer timeframes and the market internals are all still looking good, why would I get out of that? So here's the problem we all have, and this is probably especially more on day trading because there's so many different decisions we have to make and could make, is we have to reframe ourselves that I am okay with giving back unrealized gains at the expense of a much, much bigger gain. So I want to walk you through exactly what that means, because this is critical. This is really critical to having the big wins that pay for all those annoying losses, right? They're part of what we do. We talked about them already, right? And really it comes down to, you're going to put a trade on, and let's say you put a trade on and you add to a trade, right? So you had your entry, your stop loss, and your first initial add share price, right? So you put the trade on, you have your stop loss. You accepted that risk, right? So that's one possibility. It moves against you, you kick the trade out, right? Now you move in your favor and you have an add share. You just added to the trade. So now you have your original stop loss and now you have a new position on. So now you have the whole ball of wax, right? So at this point, once you have a profitable trade and you've added to it, now you have a choice of how you're going to manage that trade, like I said before. So what we generally do is we now move our stop losses up to the point where the worst thing that can happen is I will have a small loss on my second entry and break even on my first entry. So let's think about the implications of this, because we're getting back to being scared out of unrealized gains, right? Being afraid they're going to go away. If you think about it, if you're good at identifying your edge and putting on a trade, you have to think about, more often than not, I'm going to capture a couple of ones that they go and they're exciting to watch, right? So we can agree on that, and you have an edge, or you use my edge, you come into my community, whatever you decide to do. There's going to be a few that are like, oh my gosh, this thing's a rocket ship. And we've had that in NVIDIA and AMD and a bunch of these technology stocks recently. Right now, Reddit's on that kind of a move after reporting earnings. Think about what's going on. Now, your mind is scared. It's telling you it's going to pull back. I don't want to hang on to this thing anymore, right? So basically what you need to now say to yourself is, well, what are the real possibilities? I've already moved beyond my stop loss. I've added to a trade. So now I have a bigger position. And the worst thing that can happen is that thing pulls back to my original entry. So I'll break even on the first piece and I'll take a small loss on the second piece. So we have small loss as one of the outcomes. Small loss. Maybe a small profit if it kind of dances around and doesn't do anything and you want to get out of it into someplace else, right? So small loss, small profit, or everything continues to line up and the trade continues to move. You trail it up with what we call a profit maximizer, and now a reasonable win becomes a bigger one because now you've added to your original position. Maybe you've added one more time depending on your formula for adding on to a trade. And now all of a sudden you have this, what probably could have been like a $300 or $500 gain, and maybe you kick it out at your initial profit target. You have a different mindset and you decide to stick to your rules and build that position and not limit what the stock can do. And all of a sudden that same $300 to $500 gain that you might have been happy booking at your initial profit target, you let it breathe a little bit. You read the big picture of the market. Again, I'll put this up on the screen just so you can take a snapshot of that. You saw look at this right now. Look at the tick reading above zero for the first 2 hours of the day. Look at the advanced decline line up at nearly 1,800. That's a strong market. So you make those decisions. You're like, I'm not going to put a limit on this. I'm just going to keep trailing it. All of a sudden, that small, reasonable win became a monster win because you planned how to win. This is the difference between when you, dare I say, take it seriously and spend your weekends, writing in your journal and doing it the right way and saying, this is exactly what I plan to do. Again, I'm walking you through exactly how I do it. So there's a step in front of all of this, which is basically creating a trading plan and deciding how you want to do all this. Now, I've given you a decent portion of exactly how I look at the market during the day. And then there's FinViz and TradingView and other softwares you might be using. I'm using TradeStation right now, and that's kind of what I'm walking you through. But what I showed you on the screen before was actually how to build out that trading plan. So if we kind of take a look over here, I'll actually post this link below the video. You can take a look at it. There's 2 videos in here of me explaining, and that's really old video. That's probably like 12 years ago, where you can see I'm defining what strategy and edge means and different milestones that traders have to go through. But more importantly, is this stuff right here, where you can actually take this and walk yourself through from start to finish exactly what it means to build out your trading edge, all the way down to the minutia of exactly how I plan to add, exactly how I plan to manage profits, exactly how I plan to think, exactly which securities I plan to trade, so that when the market opens, day trading stocks is nothing more than running a business that happens to be dealing in day trading stocks. It's formulaic. It's no different. You turn the key, you have inventory, you have employees. If you own a regular business and all those kinds of things, you and I, what do we have? We have stocks. That's our inventory. Sometimes we're marking them up. Sometimes we're marking them down. Sometimes you want more. Sometimes you want to kick it out. All of the stuff I'm walking you through right now is infinitely less stressful when you plan it out, when you know what you're looking for before it happens, so you can tell it's there or it's not. And then you learn to make adjustments based on, well, everything I'm looking for is there, so I have to hold it, maybe even add, shift into profit maximizer mode, or everything I'm looking for is not really there. Maybe it's just a part of the market. Therefore, I might want to reduce my risk a little bit, maybe lower my expectations and just take what's available because maybe it's a little bit of a tougher day. Like I told you how I had last week. Last week was a little challenging on the day trading side of things, mostly red candles, but the big picture was still ripping bullish to the upside. So I wanted to give you everything from start to finish. I wanted you to see my screens. I wanted you to have the thought process. And gosh, I'd love for you to come into my community. If you didn't happen to see that before, this is not advertised anywhere. I'll be super clear about this. It's only in this video right now. You can only see it. You got to watch the video to even know this is available out there. If you want that big discount and you want to come into my day trading community, I'd love to see you there. If not, we'll always be friends. I just wanted to show you what was done because I kind of feel like it's my mission at this point. Trading is hard. It's really hard. It can mess with your head, but you put in the work. There's just like one little thing that's missing. And sometimes it's just maybe having a coach. Maybe it's having a mentor. Maybe it's just saying something a little bit different way. And if I can help you do that in some small way, I'd absolutely love to be there for you. All right. Hopefully this video helped. If it did, let me know. Any follow-up questions, leave a comment below. Big thing I want to get across to you, though, again, when you know what you're looking for, if it's hard to find, it's not there. And that everything starts there, because when you know what your edge is, everything gets easier from there. Never easy, easier because you're structured. All right. Have an awesome day. Hope to speak to you soon.